Hello guys, welcome to the Trading Parrot. For 2 consecutive days, Bitcoin has been facing resistance of lost support. And after having had a breakout on the 4-hour time frame and now retesting that breakout, could define the difference between continuation, if we hold that support, versus the 4-hour also joining the party of timeframes losing support and then facing resistance. If we entered in that phase over the weekend, if we confirm those checkboxes, I'm gonna let you know what are the targets that I have in mind for my current position. And of course, we need to look into invalidation points in case we were to go for the higher liquidity. Shorts are doing an amazing job here at oiling the pan to fry those eggs. If you're part of the Parrot army, you know what I'm talking about. So let's talk about these CME gaps and everything that matters over this long weekend in most places. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Saturdays are great days for the channel. Can we get 1,000 likes and really slap in the face the algorithm to make sure that this content gets to all the people that needs to go to? Guys, I have a new campaign on bluffing. Deposits from $500 already get bonuses. Trading volume also counts for some bonuses. The link is down in the description. This is a non-KYC exchange, so it just takes 30 seconds to deposit and start trading with leverage. And as I promised, I'm gonna share a 40% discount that is gonna last throughout the long weekend up until the end of Monday. 40%. I'm gonna share the code later in the video, more towards the end. Make sure you don't miss the sale over the weekend. And I'm sorry to annoy you with this ugly face, but Jim Cramer says there will be not a recession. This one is coming from Watcher Guru. Sometimes he's making up things, so don't take it too serious. Just a little bit of fun, because him saying not a recession, you have to apply the contrarian approach, and that means that we are getting a recession. I pretty much believe there's one coming, particularly the VIX hitting a new high. I keep repeating myself that after the second replica, we should get a third replica somewhere in between April 2025 to April 2026. We have Linda Tang in here mentioning, are these two actual twins? This is the QQQ Nasdaq, and you can see the two tests. Possibly this is the 200 moving average or the 21 weekly. It doesn't really matter. The point is that it used to be twice resistance, and now it's again twice resistance after a double top and a pronounced sell-off. If this plays out in a similar way, well, we're getting something very similar to 2022. And I think this is one of the aspects that are still supporting this bear market video that I published 3 days ago. Very controversial video. I just put it on the table for you to watch. This is not my thesis. I declare at the beginning of the video that we should be getting higher highs or some decent move up in 2025. And still people think that the whole video is me calling for a bear market today. That's not the case. I'm just comparing past performance with the current scenario where we are. But at the end of the video, I also highlight the things that kind of break that theory. So make sure you watch the whole video. Absolutely worth watching over this long weekend, if you consider yourself a technical trader. Here we have this interesting chart comparing Bitcoin performance, Ethereum performance versus Bitcoin dominance performance, which is more or less the combination that every technical analyst puts on the table every time that we want to assess where is the altcoin season coming, when is Bitcoin going to allow the rest of the crypto market to do something, starting with Ethereum, by the way, which hasn't done nothing. Brett says, I posted the chart below in January showing how BTC dominance thrives in QT. This is when I sold my Ethereum back. At that time, Ethereum was at 3.250. Dominance was sub 60%. Now Ethereum is at 1.8 and dominance is at almost 65. This morning, unemployment came in unchanged at 4.2%. That was yesterday. Will the Fed keep QT going? I've seen this news about Apple in plenty of different posts. I haven't found an official source for this, but if it is truth, this should be a big one actually. Apple has approved crypto for in-app purchases in the App Store. Not necessarily to buy the app, but when you want to buy something from within the app, paying with crypto. I'm not sure what's the small letter saying, if it's just restricted to financial apps or anything limiting the usage of this use case, I don't know, but still, Little by little, the crypto virus is spreading across all places. And this account called Correlation Economics is saying that the smart money continues to exit gold, and I don't know why. This is showing the performance of gold, which is the blue, and the net gold swaps, which I assume that if it's going up, it means that there are more swaps. So probably this is a point towards that they are getting out of gold with this red line going up. Well, we've seen gold topping at 3.5k. That was my final top call in the past months. And after the shooting star, now we ended up closing at 3.240. If we look at the weekly RSI, we can see that that is on the way to closing the weekly candle at 71, and that is a breakdown. So at least in terms of momentum, we are calling for a bit more downside. But if there's something I learned about indices in the past years, is that when there is a breakdown, watch out, because indices can do a U-turn very quickly. For example, in here, I was calling for the collapse of gold, and I was really excited to say, well, that's definitely gonna help Bitcoin around November, which it did, but very quickly it put a double bottom, and we started now say, hey, hold on the horses, gold might start shooting back up to 3.5k, which it did precisely here. You can see that the call was based on the statistics of my RSI VIP indicator. It went straight to 80, which corresponded at that point with 3.5k. I'm not claiming it always does this sort of black magic, but when it does, it's really impressive. And one of the main reasons I made that video about the bear market is because at the moment we need to acknowledge that traders are divided half and half across the board. There is team A, which is we are right here in the bullish pattern. We are like in 2021, we are just getting to that first stop before 69, and we should be getting a new all-time high, not necessarily just slightly higher, but some of them calling even for 300k. That's team A, the bullish people. And then there is a second half, the bearish people, that are saying, nope, we are not there. We are actually here. That 48 that I'm pointing with the mouse, that is from the technical point of view, which I discussed in that video, very similar from Fibonacci levels, RSI resistance, and volume profile. The three of them are saying that is the same point as 48. But we are 1 year earlier, and long-term holders are accumulating, leverage is increasing, everybody's preparing for the party. So in that sense, not from the technical point of view, it's resembling a lot more the bullish pattern. And I'm starting to see posts supporting one or the other all over the place. It's half and half. It would be easier if everybody was embracing the 300k potential upside. In that case, I pull out immediately. But since we have both sides, it's a lot more gray area to determine if we need to exit. And I think the biggest argument to stay still here, which is the one I prefer to embrace at the moment, is we really haven't had that euphoria. And the counterpoint to that is at 69 in here, everybody was embracing the we didn't get a blow of top. No, we cannot go home without a blow of top. What is plan B gonna say? Plan C, plan Z, whatever. So everybody started buying 69 to get out at 150k. I am just crossing my fingers that my bullishness is not wrong at the moment, and we don't end up the rest of the year just saying, we don't get any euphoria. Where is the euphoria? And then suddenly we start looking back and saying, well, that was the cycle without euphoria. That's the institutional one. The mature one. Let me know in the comments which one you think we are gonna have. Can we finish a cycle without euphoria? Thomas is saying that BlackRock has official recommendations that now include a 2% allocation for Bitcoin. And of course, he's being really relaxed to say that the world has 900 trillion in total assets, and 2% of that means 18 trillion just to Bitcoin. And that sends Bitcoin to almost $1 million. But hold on the horses, because BlackRock doesn't own the whole world. It's going to eventually, I'm sure about that, but not because BlackRock says something, the whole world is going to allocate the things in that way. I think a most conservative way of seeing that is that if they follow their own advice with the money that they are managing. I think that's more realistic. And let's keep an eye on what Warren Buffett is doing. Buffett or whatever. In 2015, he had 63 billion in cash. that has been increasing, as you can see in here. Of course, there's inflation, and this is cash. So don't just look at the numbers, because the inflation in 2025 relative to 10 years ago is pretty much double. But still, even if you double 60 billion, that you get 120. By now we have 348. So I will say he has tripled, just a finger in the air, the amount of cash relative to 10 years ago. And I remember seeing an interview with Warren claiming that he's just doing this because he has seen some moves up and he's just taking some profits here and there. Of course, he will never say, oh, it's absolutely because I'm expecting X, Y, and Z bearish scenario to happen. If he said something like that, it will be to manipulate you. No investor tells you the magic recipe or what they are really expecting publicly. Whatever they say is always to manipulate. After all, it's business. MVRV Z score has been increasing, and we are very far from the highs that we usually get that euphoria. So this kind of indicator is also supporting that idea that we still don't get those extremes that come together with the end of a cycle. In previous cycles, for example, in here we had 3 times that, then we had it 2 times. In 2018 top, we had just 1. In around 2021, we had a tiny microscopic exposure to the red zone of the MVRV Z score. And then on the blow of top, well, we didn't get blow of top. On the all-time high, we got a much reduced level in here. So if we subscribe to some sort of projection in here, I'm pretty confident to say that we are not going to get to red. That is absolutely possible, but still being so low, this is more than half reduction from any other cycle, not even 1/3, I will say. So from this point of view, there is some room to go. And in the past 2 days, we have combined over 1,000 of inflows on spot ETFs for Bitcoin. And I think I heard some positive news on Ethereum as well, coming from BlackRock. Let's have a look in here, and we got 20, which is pretty decent, but on 25th we had 100. I am subscribed to CryptoQuant alerts on Telegram, and I've been seeing in the past few days some excessive inflows to exchanges, starting with 500 million, almost 600 on the 1st of May. Then we have almost 500 again on the 2nd of May. And today, again, 500 million. That combined is quite a lot. And again today, another inflow for 585. So in total, this is almost $2 billion, over 20,000 Bitcoin. And remember that next week we have the Fed interest rate decision. That's in 4 days. And there is a 97% chance of no change. Just a 2.8 expecting ease. And as you will probably expect, with these high expectations of no change, probably that's already priced in. And if we get that surprise of the Fed easing on interest rates, which I think is not going to happen, at least we can say that there will be some sort of rally incoming if that happened. If you missed my videos this week, or my post on Twitter, Telegram, and Instagram, I've been very vocal about what the Fed is currently doing, which I think in some way we can use it in anticipation to whatever they're gonna do. You can see that there's been a double top here at 348 trillion in their balance sheet, and there's been 3 consecutive weeks of reductions with a breakdown of the channel support. We still don't have a lower low, so the uptrend is not fully broken, but watch out for this downtrend in here, because that can really spoil the move up. For example, we have all this move up that stopped on 22nd of April in 2024, and that was enough to keep us 9 months in a channel with a downtrend, or some could say just in sideways, up until we got into 49K. Once we bottom with the Federal Reserve doing that to the balance sheet is when we started going back up. Let's look at CME gap potential prices for this weekend. Something I have to be honest, I ignore if on Monday CME is gonna open. Let me know if you already know, if you checked on their website. I'm gonna assume it's gonna be closed, but confirm down below with a comment, that will be nice. On Friday, it closed at precisely $97,022 on Binance. On CME Premium, on the top end, we get $97,680. So the one I care is 97 because I'm tracking the price just with exchanges. CME is more expensive, of course. And we have from 2 weekends ago a CME gap around 91,500 price on Binance. That is one of the lower targets that I'm looking for, with the caveat that sometimes when we start an uptrend or a rally, we leave some of these gaps for quite a while. So don't just assume that you can take a short from here and that is for granted that you're gonna take profits. We could just go to 95K over the weekend, more or less around 95,300 maybe, and retest the breakout and just continue next week. I am keeping an eye on that because I'm on a short. Some news about the aggregated open interest. For a second consecutive time, it has reclaimed $28.8 billion. That is something bullish because it's confirming reclaiming the horizontal range, but also is reclaiming the downwards sloping trend line that it just retested on the 1st of May, now putting a new high. That is also bullish. The context of this bullishness is a little bit slower than when we look at the 4 hours, so don't get confused if I say on the 4 hour there's something bearish, but this is bullish. This applies a little bit slower pace than other data points that we're gonna review during this video. Alright, so on the 4 hour, let's look at the RSI, and you can see that we have this channel. We finally, after moving this line multiple times, we move it from here, then to here. So there's been a bunch of consecutive bullets that the momentum took until it found support at 47. We had a breakout that was on Thursday, and after the breakout and the double top in here, I said we might as well go back and test support. So here we are. A few hours ago, we closed this candle in the morning, confirming a retest with perfection of the trend line of support. So now this is pointing up. So far, it hasn't broken that level. If we said we meet again with that line later, that will be more or less at 51.52. If we lose that level, we have levels at 46 and at 34. And the upside from here, I will say up until around 82 is where we can get. Let's move this number somewhere in there for future reference. Remember that all the changes that I'm doing to this chart, if you go to my Telegram channel and you click Trading Parrot Chat, you're going to be able to discuss them. If you click TTP charts, you're going to be able to request these charts for free. Not all of them, but a good amount of them. If you then get a subscription, you can join TTP Charts Pro and access all my charts, all my drawings with frequent updates of 15 minutes. And next week, we're going to start testing as well the TTP AI agent. That agent is going to know everything I know, and we're going to allow all the Charts Pro members to test that combined with the charts. You can access this from the shop in my Patreon page, link down below. So what we are doing at the moment, basically on the 4 hour, is retesting this line that was previous resistance, now a support. So for the bulls, if we hold and close like this, like in 30 minutes, we confirm that this is a first successful retest of the new support. If we break this line of 95,500, or if we break the RSI of 95,900, slightly higher, which is representing the support from the white line here, then the RSI 4 hour, the 4 hour time frame, could be joining the party of the breakdowns. Daily already did it and had a revenge rally of 2 days to retest the breakdown of daily. Interesting because we're getting a breakdown of daily prior to 4 hour. 4 hour is still healthy here in the uptrend and just retesting continuation to upside. Yes, guys, trading requires you to be able to chew gum and at the same time walk. So if your brain can do that, you can also trade. Of course, I'm in a short, so I will be really keen to see on the 4 hour a breakdown of the RSI at $95,900, ideally in the next few hours. That will do some confluence with what we are seeing on the daily and potentially get a move on the daily to retest somewhere between the range of 68 to 41, where we get the full retest of this move. I wouldn't expect we get so low as 41, but maybe somewhere here in the middle, maybe just 55 will do the trick. After all, we broke down on the daily. So let's say a retest of 55. How low can that take the price on the daily time frame? So let's put 54 in here. We also have the 41 and the now resistance of 71. So if we did that, the first support is at 92,100. By going there, we get very close to fill the CME gap from 2 weeks ago. If we go lower in that correction, we come back to 86K more or less. We're going to look into what liquidity we had at those levels. On the daily, the momentum continue to diminish on the MACD. We can see in here, but we are still far away from any bear cross on the daily. That will really contribute to my short to become a lot more profitable, so I don't have to exit too quick. Because let's face it, yesterday I say if we get into 95,500 and we retest that successfully, and I look at the numbers in the charts, forensic analysis and all of that in the order book, I might decide as well to exit. But there is something, we are on the weekend and the order book is gonna look really thin, which is gonna make a lot more difficult for me to really say, well, this is a successful retest with no volume, no actors, no news. It is a challenge. And guys, I don't know if you noticed, but last weekend on Sunday, we closed at 93,600, which was perfectly below the resistance on the weekly. This line defines being between bearish half to bullish half. We've been all this week on the bullish side, so on Sunday I don't have to repeat this, but we must close above 93,900 on the weekly to not give the idea that we are seeing a rejection. A rejection at this level in here, it's definitely going to resemble what happened here at 48 from the technical point of view. And if that's the case, we need to be looking for a rejection that looks like this. We go just into the golden pocket, not lower than that, ideally a bit higher, to do just a retest of the breakout that still looks bullish. We're looking at 2021 in here. This on the top is 2025. So if we do that, let's say we go just to 85, 86. That's how low we can get if we want to resemble a retest like that. Another alpha that I'm currently using in the back of my head is that we have a rally from April into May without doing the due diligence, which is to lose virginity on the CPR pivots. The price is still goofing around at 96 without paying tribute to 91K, which is the top pivot at the very least. In history, we have seen that it's very, very low likely to stay virgin throughout a full month on Bitcoin. The only exceptions is when you are in banana zone. So if you're subscribed to the idea that we are already in banana zone and we're gonna start going into 130K overnight, sure, that's doable. In that case, we need to go to 102, followed by 109, and then the top resistance 122,900. But if we aren't, we should come back into the pivots, retest them, goof around a little bit within those pivots. The lowest one is at 85K at the moment. If we go to that 85K, that does resemble this move that you can see in 2021, the one that Lemon is calling and that Lofty as well is pointing out. The monthly has a very similar situation as the weekly, but there is a little bit of difference because the monthly April managed to close above the resistance. So this candle in here doesn't have the responsibility to do that. That is already done. All we need to achieve in May from the monthly point of view is not to close below 93,600 to do a retest. Let's look at the liquidity a little bit in here. We're looking at all the liquidity in the short term. I'm going to remove 10x just to focus on high leverage. Where is it being placed at the moment? And we got some liquidity starting from 99,500. So I will say that the oil is being spread on the pan. The risk for my short is increasing. 100K also has some decent liquidity, and below the price we do not have that much. And that's why at the moment I'm relying on other aspects for alpha to go lower. As I've been saying in the past few days, mostly imbalances, fair value gap, CME gap, pivots on the CPR, all that together with the SOPR saying that short-term holders were selling there, and leverage squeeze calling for too much leverage at around 94K, specifically from the longs. On the longer term, we are already entering in the green area. We are out of the blue, we're entering green, followed by yellow, and that is incremental amount of liquidations from longer term. This time is on the daily time frame. We have a target as well for the double bottom in here, pointing towards 102K. So that is kind of the current risk for my short. Let's update the liquidation heatmap 1 month. That 82.83 is becoming very heavy, but yes, up until 102 we have liquidity very close to the price. Notice that it's not as much as we used to have around 95 to 97. That there is very thick, nothing compared with what we have in this area, but since it's very spread out, it could be an area that market maker decides to take first before deciding direction. And I'm talking about a potential punch of that and then a move lower. On the liquidation map, let's refresh this. This is how it was looking yesterday. And today we have at 98K, more or less $20 away from that. And still liquidity for the past 30 days is below the price. Delta liquidations at close proximity from high block capital are indicating 361K. It's been decreasing thanks to the move down that we have this morning, but there is still petrol to go towards the lower end from the point of view of this alpha. Bid-ask ratio remains very flat, so no alpha in here. Funding rates have been hovering around the negative, which is actually bullish, and the longs have increased to 42, which is something, but you know, a few days ago, a few weeks ago, we were at around 70, almost double the amount of longs. On the 15-minute time frame, if we look at the detail in here, you can see that there was some sort of double top. We broke down and now the price is hovering at around 96,300. We'll see if that turns into resistance, but again, I don't like trading the 15-minute time frame, but I left a target in case we broke down that, saying that we could go into 95,200 to fully test the previous resistance. So if we get rejection from 96.3, we could now go into 95,200. That is not enough for me. What I'm really looking for is to break down below 95,200 to fully turn this into a narrative of just a liquidity hand to the upside with a breakdown, continuation to the downside, and the formation of the Bar Simpson silhouette, which will be really awesome for my short. Let's look at the order book on fire charts. You can see that we have around 61 million at 97K, followed by 30 million at 97.7, 40 million at 98.6, and 54 million at 100K. So there's plenty of resistance at the moment over the weekend. Do not count on that necessarily staying there if price starts moving up. Something that is actually bearish great for me is to see that both purple and brown whales are now moving down, and it is the smaller fishes, the green band at the moment, that is currently buying to the upside. Those are 1K to 10K, so pretty much the losers are buying and the winners are selling. I don't know if that's gonna stay like that, but it is promising. Hype trading light is still down, super annoying. It's one of the few platforms that I'm still paying for and no news from them. So I'm currently using marketmonkeyterminal.com, that they are offering this for free. A few days ago, I talked to the owner and developer. It looks pretty impressive. You can even see it from close proximity and get all the footprints. It's on beta or alpha and you can access it for free, so it's great. Here is the funding rates, and we can see some orders at the moment at around 94,300. They were moved from 95, 1K lower as the price was coming down. There is some resistance at 97,700 and 97,800. Fair value gaps, this one in here in brown is supporting the idea of going as low as 95,200. The question is, after we get there, are we going to start bouncing back up into 100K and see a rally over the weekend? I don't know. We have to monitor for that. Me more than anyone else, of course. If we break below 95,200 and we start putting candle closes on the 4-hour below that, I'm gonna get my hands with some cream, because that could be an indication that maybe, just maybe, we are gonna consume these juicy fair value gaps from 91,500, hopefully at least until 88. If we go into 84 or 85, then my short is gonna be really happy. And I think what's driving the move up at the moment is what the indices are doing currently. You can see that the Nasdaq has moved very close to that resistance that it lost around the 24th of February on the weekly time frame. It managed to close at 51 and the resistance starts at 52. That means that the price reclaimed this neckline and is on the way to hit that resistance of 52, 53 at around 20,400. This is using the symbol Nasdaq. There are other symbols for Nasdaq where the price is at around 17K, but I'm gonna stick to this because I don't have my drawings in the other one. S&P did something very similar. They are all challenging lost resistance and calling for continuation. But in the past, in history, there's been plenty of options where we go to the 21 weekly and that is the kiss goodbye. And I guess many investors over the weekend are thinking, hey, what's gonna happen once we touch that 21 weekly? And we need to monitor what Bitcoin is doing, because Bitcoin could go beyond that line, because Bitcoin loves to outpace everything in the same direction, to anticipate things that general markets could do, not necessarily end up doing. So if we saw a rejection from the 21 weekly, that could call for lower lows on Nasdaq, S&P, and that's the perfect recipe for this video bear market to come in play, contrarian to what I believe, which is we should be getting higher highs. Are we not gonna get them? Let me know what you think in the comments. Guys, if you want to trade $500 for free, I have a position airdrop on Bybit. You can trade any of the coins in this list. Just open the description, find the link for Bybit and click register to claim. You're gonna get the $500 and you can keep all the profits that you do with that. If you get rich, just send me something. Guys, as I promised, the 40% discount code for all my shop on Patreon is gonna last until Monday, end of Monday, and the code is weekend TTP written with capitals. You can see it right here, weekend TTP. With that, you discount 40% on all the prices shown here on the screen. Thanks so much for supporting the channel. Enjoy the rest of the weekend, and I'll see you on the next one. Bye bye.